This is Money Talk Radio and the Ellis Martin Report. Today we're speaking with Sid Rajeev, Head of Research at Fundamental Research Corp, North America's largest independent equity research firm focused on the resource sector. We're diving into Blue Lagoon Resources, trading in Canada as BLLG and in the U.S. as BLAGF, citing strong fundamentals, robust margins, and a transition from development into full-scale production at its Dome Mountain Gold Project in British Columbia. With a toll milling agreement in place and a projected $23 million in revenue in year one, Blue Lagoon is positioned to become one of the most compelling junior producers in the gold space today. Let's hear what Sid has to say. Sid, welcome back to the program. It's always great to visit with you.
Always a pleasure joining you, Ellis.
About 5 months ago, you came out with a rating for Blue Lagoon, a buy rating of $1.11. We're about there today, and you have just released another report on Blue Lagoon Resources, BLLG, and you've issued a buy rating of $1.74.
That's true. So let me give you some background here, Ellis. So we initiated the coverage on Blue Lagoon, as you said, in July 2025. Later that month, we did a site visit for the official reopening of the Dome Mountain Gold Silver Mine. We've been doing notes and updates since then. Just yesterday, we put out our latest updates, and that's because of the company's official transition from an exploration development company to a gold producer. Now, typically in such situations, based on experience covering juniors, exploration producers in the last 20 years, companies go through a re-rating. And what that means is that they start commanding a higher valuation.
Now, some of the peer companies to BLLG, Blue Lagoon, are trading at near $3 a share, $2.50 a share, and the prospect of them going into production anytime soon is really not there. So I think your rating's kind of conservative, but you have to be conservative, and I'm thinking the stock could perform much better. When do you look at another re-rating, if you will?
I'll walk you through our valuation methodology, if I may. For most juniors, including Blue Lagoon, we typically use two valuation models. Number one is a discounted cash flow model, or a DCF, and number two, it's a comparables valuation model. I'll talk about the comparables model here as it's more easier to explain. So in the case of Blue Lagoon, what we did is that we looked at similar junior producers, gold producers, and we looked at how they are trading in terms of their enterprise value to revenue and enterprise value to EBITDA. So in the case of Blue Lagoon, we found that currently the shares are trading at 1.2 times our projected revenue, but the sector average is 3 times. So that's a 61% discount. Similarly, Blue Lagoon is trading at 2.9 times our projected EBITDA. Sector average is 6.8 times, which is a discount of 57%. So both these multiples show that Blue Lagoon is trading at approximately 60% discount versus the sector average. So that's how we try to come up with a fair value estimate for every stock we cover.
I think the stock has jumped up about 30% just in the last week and a half or so.
Exactly. And that's when more of the markets, more investors come to realize that there's a brand new producer, Blue Lagoon. And once they realize that when the transition from an exploration to a producer status, typically companies go through re-rating. And that's what I think we are seeing these days.
And in fact, they're still an exploration company. There's a lot of potential upside to go. And from what I understand, they probably don't have to dig into the public market to raise money for that expansion of exploration because they're going to be generating potentially this year about $24 million worth of revenue.
Exactly. So that's one of the main advantages we see of Blue Lagoon is that there's no need for any additional financing, at least in the near term, limiting potential share dilution. So what management intends to do is that they're going to allocate internally generated cash flows to both nearline and regional exploration. Now keep in mind, more than 90% of the project has not been tested properly. So there is room for a lot of resource expansion. But again, I need to say that exploration is a risky business, but there is a potential for resource expansion and potentially expanding the mine life. The current resource we think would support approximately 15 years of production.
How sensitive are EBITDA and free cash flow to gold price movements at current grades and throughput?
Highly sensitive. So even if you look at, for example, the first year, what we are thinking is Blue Lagoon could potentially process or mine 40 to 50,000 tons per year, and that could result in about 12 to 15,000 ounces of gold in the first year. Now, 15,000 ounces in today's market is about $70 million US in revenue. And we think EBITDA would be in the 30 million range. In terms of how sensitive our valuations and our projections are to gold prices, in our recent updates, please check that out. We present our base case scenario and also a sensitivity analysis, which shows our fair value estimate on various long-term gold prices. And we found that our fair value jumps to close to $2.25 if we use today's gold price as a long-term average. And that's compared to the $1.74 in our base case.
Fair enough. Now, does the profit share structure with Nicola Mining materially impact margins relative to owner-operated milling, in your opinion?
Yes and no. So first of all, the company has not disclosed what's the profit sharing agreement with Nicola. Typically, in such transactions, we think it could be anywhere in the range of 60 to 40 or 70 to 30 with the Blue Lagoon and 30 with the milling partner Nicola. Typically, such transaction would impact profit margins of producers, but Blue Lagoon is targeting a much or significantly high grade resource than a typical mine. They're targeting grades of close to 9 grams per ton. Typical underground mines, the average grade is about 2 grams to 5 grams. Since the average grade is significantly higher for Blue Lagoon, their cash cost will be lower than a typical producer, giving them enough room to pay processing fees to their partner.
Let's take a look at the price of gold. It's near $4,600 US an ounce right now. Did you anticipate that kind of growth in the price of the metal itself 5 months ago?
Absolutely not, to be honest. We were expecting, or we have been bullish on gold for some time, given potential weakness in the US dollar and escalated global tensions worldwide. So although we are bullish on gold, we never expected how gold and even silver moved in the past 6 months. All that said, we still remain bullish on both gold and silver, given the same reasons. We continue to expect US dollar weakness and escalated global tensions worldwide in the next 6 to 12 months, which should help gold producers like in the near term. The potential impact of this environment is that we expect more M&A or transactions in the next 12 months as larger companies seek to expand their portfolio by acquiring smaller juniors.
Do you believe that Blue Lagoon is one of those potential M&A targets? I haven't really heard that from the CEO, Ronavig.
Management has not really talked about M&A because their goal is to primarily expand their resource, bring their valuation up higher before they start shopping around. But from a third-party perspective, from our point of view, any project that makes sense for a larger company to expand, be in terms of acquiring a large project with exploration potential or a smaller project like Blue Lagoon, but currently generating revenue with high margins, they are all attractive for larger players.
Even now for a company, let's say like Kinross?
Even now, even though Blue Lagoon has not talked about it, there are potential opportunities between Blue Lagoon and Nicola even. There are M&A opportunities there for them to combine and then be a larger entity while managing multiple projects.
Do you have some information on that?
Absolutely no information. This is clearly based on our past experience covering companies. And even like when you look at the potential synergies between the two firms and their facilities, I think there are opportunities. But management of both companies, I've met with them. I spent a lot of time with them in the site visit. They have not communicated any such intentions in our interviews.
Let's be clear that it's just you and I speculating here, and the company has made no moves or comments in that direction whatsoever.
Zero.
Nicola Mining is a sponsor of our program as well as Blue Lagoon Resources, and you are also paid for your research, so we are biased, absolutely. But having said that, there's many companies in the junior mining space. What does it take for any to get traction in the market these days? Near production? Greenfield doesn't seem to really cut it unless the grade is high.
Exactly. So when prices are at these levels, record high across all metals and commodities, ideally or typically all types of companies should get traction. But we think, as you rightly pointed out, it's companies that are near-term producer, companies that are exploration plays, but higher grades, lower capex, easier route to production. These get more traction. These are in more higher demand than, say, large projects high capital intensive projects.
Sid, when do you think we're going to talk again and you'll have another rating perhaps on BLLG? Another 5 or 6 months?
Maybe restore, because what we're going to see is now there are more eyeballs on the story now that they have commenced production. Now all eyes will be on how the company will be able to ramp up operations, ramp up productions. So we got to see cash flows coming in. The more analysis required in terms of valuation. So I hope we get to talk sooner on the progress at Blue Lagoon.
Sid, it's always great to catch up with you. I look forward to our next chat. Thanks so much for joining me today on the program.
Have a good day, Ellis.
I've been speaking with Sid Rajeev, Head of Research at Fundamental Research Corp, about his firm's latest coverage on Blue Lagoon Resources, trading in Canada as BLLG and in the U.S. as BLAGF. Full disclosure, both the Ellis Martin Report and Fundamental Research Corp are compensated providers of investor awareness for Blue Lagoon Resources. For more information, visit researchfrc.com and bluelagoonresources.com. For Money Talk Radio and the Ellis Martin Report, I'm Ellis Martin.